Okay, stock market technical analysis. We'll get into the charts. If you guys are finding value in the private member group, let everybody else know. We had a pretty solid fade trade today as we gapped up. I pointed out in the member group that we were basically at resistance and we were looking for that fade. Yeah, great trade there. And if you guys are finding value on the public channel, feel free to drop me a thumbs up. Private member group, link in the description below if you're interested. Okay, so what am I going to start out with today? We'll go to the triple Qs. There's a couple things I'm really seeing that are, I think, important. Triple Qs right now on the hourly chart, we're filling a gap. So there was the gap up from yesterday, and we're now filling that gap. So maybe we get a bounce here. Okay, I could see a bounce maybe up to the downtrend line. That would probably be the max bounce there. And so, there's possibly a bounce. But there's one thing that I am noticing for today. We had some support levels like on the hourly. You can see this was former resistance, had a couple of tags of it, gapped up to it. We sliced through that like it wasn't even there. Boom, just sliced right through. And then we just kept going right down to the gap. So pretty impulsive sell-off without even really any reactions at those support levels. When you see that, when I'm seeing levels of support just get sliced right through, it tells me that we likely need to focus on the larger time frame. So when I go out to the daily chart, what we've got is, again, I talked about it as the level of resistance, which is about 474-ish. That was the target. I didn't think we were going to go much higher. My target for reshorting was there. That's been in my videos. And sure enough, that's played out. Now I see a potential bear flag. If you look at the top, coming off the top all the way to there, and then we've kind of been flagging out for the last week or so, and then you take the continuation of that flag and mark the measured target, and it's basically right there. Right down where the 200-day moving average is, which means it would be a relatively, quick move down to that 200-day moving average, maybe over a period of about a week, and we would be right down there hitting the 200-day moving average. So that is the kind of the major target of this pattern here on the daily chart, which as of right now, I think is where we're heading. Now we do have Amazon and Apple reporting earnings tonight, so maybe they change that. Maybe, back to the hourly chart on that. Maybe they gap up after earnings, and that would set this up for, a push back into resistance, most likely. I don't think we'll recover it, but I don't know if I think it's possible, but I don't know if it's probable at this point. One reason why, if I go over to the mega cap tech stocks, looking at NVIDIA, okay, NVIDIA's gap, which was basically right here, gapped up pretty big yesterday. It had a really big up day yesterday, but of course that's after being down quite a bit from the lows. It moved 15%, but it's now entered that gap, which is right there, and gaps that are entered are often filled, which tells me more selling in NVIDIA, and more selling in NVIDIA is likely more selling in the triple Qs. It's likely going to continue to put pressure on the triple Qs. So yeah, I really have to look at this from a larger standpoint. And as far as I can tell, NVIDIA is in a downtrend, and we are continuing that downtrend. So I see NVIDIA kind of moving all the way down to this gap, to fill this gap right here on the daily chart. Pretty good support down there at 96.50. You can see reaction highs there. So that's the move where I think we're heading here in the short term, is right there. 90s, 96.50, 97, somewhere right in there. Amazon got rejected today right at resistance. Now it's right ahead of earnings, so it could gap up on earnings. And if it is going to gap up on earnings, it's probably going to gap up over the highs and put in a new divergent high. So definitely high risk. However, it did get rejected, and a gap down would likely send Amazon down to the 200-day moving average, about 171.04. That's the way I'm leaning right now. The negative divergences have been intact for a while. So I'm definitely leaning towards a gap down. And again, that's likely going to bring the market down with it. Apple, you can see here, again, this is the trend line we were walking up. Rallied up to resistance. Didn't quite get there, but so far, that's a rejection candle right there. My trend line could be off slightly. In general, that's a rejection candle. It tells me Apple earnings are going to come out. And yeah, if they come out positive, you're likely just going to do a back test of the trend line again because we didn't quite get there. So maybe that's how that wants to go. But again, I think that gets rejected. Otherwise, very probable that we're heading down. There's a big breakout candle right here. So we're going to be heading down to that area, about 194, and the 200-day moving average is, slightly below. Financials getting smoked today. Bearish engulfing candle. And, we're engulfing it's actually not really a bearish engulfing. Well, actually it is. I apologize because at one point we were basically right there. So engulfing the candle there. And, it looks like a reversal candlestick to me. The other thing on there on the financials is that's a divergent high just recently. Higher high, lower high in momentum. We have negative divergence. The financials, as far as I can tell, have started to sell down. And that KRE one I pointed out, the regionals, that one's breaking support, just slicing right through it. So I don't see support till about 52.80. And again, there's kind of the target on that one. It's about, down there would be a back test of that trend line, that long-term trend line. So that'd be a decent target, fill that gap maybe and hit that trend line. XLY, this is your consumer discretionary, pretty clean bear flag from what I can tell. There's your flag pull. You flagged out over the last week, continuation. To me, it looks like it's going to send us down to the 200-day moving average. And yeah, probably, by Friday. As far as I can tell. Usually it's pretty impulsive. So you've got impulsive move down, flag out, impulsive move down. So I suspect that we have a relatively swift move. Maybe not by Friday, but by next week, I would suspect we'd be down there. SoFi, this one I was looking for it to go long, but with the price action in the broad markets, this to me doesn't look like it's going to actually push up to that major target. And in fact, now, it's still kind of at support, but it looks to me like we're going to head down and do a back test of that trend line. So that one, it's down 5% today. It just doesn't look great with the broad markets, really, with all the pressure we're seeing, especially in the small caps. You look at the small caps IWM, which is made up mostly of, there's a lot of regional banks in the small caps, but look at that, candlestick today, big rejection candle. We've got negative divergence right there. So that was a divergent high and boom, big rejection. So as far as I can tell, small caps are probably going to go fill these gaps down here. And we've got a gap. If I kind of clean up the chart, we've got a gap all the way down there. That'd be my target right down there. And that's a move. That's about 203.50. So that's a move on the small caps, another 5.5% or so to fill that gap. You'll probably get a little zigzag halfway through, maybe here at 211. But yeah, it doesn't look good for the small caps. So, and look at Meta. Meta obviously opening up today. In the pre-market, they pushed it up and nothing but selling. Institutions say, you know what, sold to you. And that's exactly what's happening. They gapped up and they're unloading their positions into that strength. Again, that's what you want to do. You want to sell into strength or short into resistance. All right, that's the same thing. And then you want to buy into weakness. All right, you want to buy low, sell high, short high, cover low. All right, but most people, they just can't do it. I get a lot of comments on big days like yesterday where things are rallying, and one person said that all we need is Nvidia stock, and that because it was up like 15%. And they're like, the market's so strong, and we only need one stock for this entire market to be lifted up. And it's just naive to think that. It's not based on technicals. It's just based on emotions. At the end of the day, it's based on maybe they must be long Nvidia and they see their account up 15% in a day. Of course, after dropping, from the highs, dropping 27%, but popping up in one big day, they get emotional and rallied up, and then they come out and say stuff. But in general, Yeah, technically this thing is getting rejected and it looks like it's heading lower along with the market, you know. Another one that's kind of interesting, now it's definitely higher risk, SMCI. This is another semiconductor kind of hype stock that was pumped on, people bought into it, and to me it looks like it's trending lower. Support was really right about here, 695-ish. It's been broken, and they're trying to hold the 200. So they hit the 200, popped it up, back down at the 200. And we have earnings coming out next week. So it could go either way, of course. You know, if the earnings are good, they're likely going to gap it right up to that resistance level. So you'd have to, you know, ride that out, because I don't think that resistance level is going to break. I think that would hold. But if earnings are bad, I can see this thing gapping way, way down. Probably down, well, you know, probably somewhere down into here, about 380 to 355. And from where we're at now, that would be a drop of 50%, to 40 to 50% drop. Could easily do that. You can see that when this thing rallied, it just went straight up. And we've now started to enter that range where it's kind of a thin zone where it should just plunge straight down. So earnings is likely going to be the catalyst. Maybe it doesn't gap all the way down, but earnings will likely gap it about halfway down. Maybe they come and buy it, but ultimately I think this thing looks ripe to head lower. Of course, higher risk to take a short here right at the 200-day moving average. But the way this market's been going is when there's misses, when these things miss on earnings, they're just gapping down huge. So you almost have to take that risk if you want to catch that gap down. Because if it gaps down big, it's really hard to short into the hole on that one. GDX, gold miners, again, I know there's several people interested in those. Don't fall in love with them, you know. I mean, gold, you know, don't fall in love with the dollar is going to crash story, okay? Yeah, the dollar is likely going to continue losing value over time, but again, that's over time, and if you just fall in love with the narrative, your portfolio is going to lose a lot more value than what the dollar does. The dollar, I mean, the gold, you can see here on the weekly, again, we've got this big triangle, and this is resistance right here, all right, on the weekly, and we popped it briefly, but again, it's still below it. It's been rejected so far. So until you see a breakout on there, you're at resistance on the weekly, which tells me that the gold, as of right now, is likely or probable. It's not going to go straight down. It's going to, you know, you'll bounce and but gold's going to work its way, or gold miners are going to work its way down to the bottom of the triangle. Okay. And that's how I would trade that. Until you see a breakout, probability says lower. And I'm kind of all over the place because obviously, you know, the markets are moving a lot. So they move quick, and you kind of have to really move around and pay attention to stuff. But here's ARM Holdings. This was a semiconductor. This is another one of those hype stocks that they were pumping during the NVIDIA, you know, AI pump fest. And you can see now this is not a short to me. It's already played out, or it's just not. It's not a. The risk reward ratio is not very good, so definitely not a short anymore. But this is a big bearish rising wedge. The widest part of the wedge is it's about there, and that sets us up for a projected target of all the way down. Yeah, these lows right here, basically down there, and you get down there. That's the projected target. You're probably going to have a bounce, but this thing's likely going to head straight to the 200-day moving average. Then you most likely will flag out a little bit and then eventually roll down. So that's what I see on that. This is one of those semiconductor pump stocks, and it's just like SMCI. So as far as I can tell, we're probably going to get the flush down in SMCI as well. Okay, so obviously to wrap up, I think we're heading lower. Apple and Amazon earnings can change a lot of that, and you know that's kind of the risk of earnings season, is things can kind of gap up on you and the narrative can be changed. You know, everybody's panicking and freaking out today because the rally that lasted the last couple days, especially yesterday, was a pretty strong rally, which we caught in the private member group. We were long, caught that rally, traded it right up to that target, that resistance level we thought, and then reverse short. In the private member group, I told everyone towards the end of the day it was time to get short again. And sure enough, you know, that was the right move. And then yeah, so earnings can change all that. Maybe there's one, this to me looks like a bear flag. Maybe there's one more push up into resistance kind of on that flag and then a continuation down. But again, if earnings come out negative, then this flag will likely continue and we're probably going to see some pretty strong selling in the next few days. So, probabilities tell me lower prices. So we will, and especially seeing things slice right through support levels today, the selling's really impulsive, so it tells me that we're going to have a strong flush down. So I'll leave it at that. You guys decide what you want to do. Obviously, I could be wrong, and I'll catch you guys on the